Why should your client's fixed income gift list include the Vanguard Core-Plus Bond Index ETF? Hi, I'm Jeff Johnson. In this video, I'll break down what makes this ETF a great portfolio addition and outline the 3 types of clients who can benefit from investing in it. I'll also talk about why smart bond strategies are critical as we close out 2025. Year-end is a perfect time for financial advisors to take stock of their asset allocations in their portfolio. And in 2025, with stock markets up more than 16% so far on a year-to-date basis, it's possible that portfolios need rebalancing. And particularly with valuations in equity markets, by many measures being still somewhat on the stretched side, might provide a great opportunity to rebalance into fixed income. We believe that fixed income remains a very attractive asset class, both from the standpoint of being a diversifier relative to riskier asset classes like equities, but also because of the very attractive yields that still exist in fixed income despite a few interest rate cuts in 2025. It's the holiday season. This time of year, many of us, including myself, are wrapping up last-minute holiday shopping. And that reminds me of one of my favorite gifts to both give and receive, which is the Swiss Army knife. The Swiss Army knife has a range of different tools, many different uses, often comes in handy and fits in your pocket. And I'm thinking about the Swiss Army knife right now because it reminds me of a new ETF that Vanguard recently launched, the Core-Plus Bond Index ETF, with the ticker BNDP. And it reminds me of BNDP because BNDP fits a range of different investor use cases, making it very flexible for advisors to use in their portfolios. BNDP is benchmarked to the Bloomberg US Universal Index and managed by Vanguard's Global Bond Index team. This team includes more than 40 portfolio managers and traders, and the team has more than 4 decades of experience managing fixed income index portfolios. I see 3 main use cases for BNDP. First, there's a growing demand for fixed income index strategies and fixed income ETFs. Fixed income ETFs in particular are becoming more and more popular owing to their liquidity, transparency, and low cost. The second key use case that we see for advisors is that many build the core of their fixed income portfolio with the US aggregate index. Now, there is nothing wrong with the US aggregate index because it offers broad diversification to treasuries, investment-grade corporate bonds, and mortgage-backed securities. But BNDP broadens the universe even further by providing extra diversification to sectors like high-yield corporate bonds and emerging markets. And this broader diversification comes with the added benefit of extra yield. Historically, BNDP's benchmark has earned about 30 basis points more than the broad US aggregate bond index. I would just note, though, that extra yield comes with some extra risk because the sectors that it includes, like high yield and emerging markets, can be more volatile. So it is only appropriate for those investors where that fits in their portfolio. There's a third use case for BNDP. Now, Vanguard is a big believer in active management in fixed income, and we're very proud of our deep and experienced active fixed income team that has a growing list of products that are available. However, some investors are frustrated with underperforming and high-cost active fixed income strategies. And in fact, about 50% of active Core-Plus fixed income strategies have underperformed their benchmark over the last 3 years. And across the category, the average actively managed Core-Plus strategy has an expense ratio of 50 basis points. So for those investors looking to replace high-cost, underperforming Core-Plus active strategies with an indexed alternative, BNDP with its expense ratio of 5 basis points can be a great alternative for them. Happy holidays, everybody, and be sure to like and subscribe to this channel for more insights from Vanguard's thought leaders.